So when I think about the global economy at the moment, I still start looking at what the Trump administration's doing. And of course, they are still flooding the zone. There's still lots of policies. But the big one is still the tariffs. And the interesting thing is that after Liberation Day, when people were really concerned about what would happen to the economy, it looks like things have been pretty resilient. It looks like things slowed a bit for a time, but it feels like they're now speeding up. And I expect next year to be better than this year. So again, the tariffs are interesting in that they are a tax. So the main thing that's happened here is that tax revenue's gone up by about 1 percentage point of GDP. Now that does mean that US growth slowed a bit for a time, but it is now picking up again. And most interestingly, even though it hits the goods sector, global trade is still going up rather than down. So it's been a diversion story rather than a destruction story. China's really interesting again at the moment in that you have a very unbalanced economy. The perversity is that we spend a lot of time talking about the tariffs, but the strongest bit of the Chinese economy is actually exports. So exports have held up well, but domestic demand is soft, and in particular investment's been quite soggy. So I think you're now at a point where the authorities will need to stimulate a little bit more. They're quite happy with 5% growth, so they won't do very much, but I think they will have support activity as we go into next year. Europe has been sluggish. There's been a lot of uncertainty about what's happening there, and there are some very big structural issues. In particular, Germany is being outcompeted by China. But cyclically, it looks like the bottom's in. It looks like the surveys are starting to pick up. So I think 2026 will be a better year than we saw this year. Equity markets normally move with global growth, but sometimes they get a little bit out of balance. And I think that's mainly what we've seen in the most recent period. But if I'm right and global growth is better next year, I think equities will be higher at this time next year than they are now. In the Australian context, because we have a lot of banks and a lot of mining companies that move slightly different in the US, but again, I think that it will stabilise and I expect prices to be a bit higher next year. When things get uncertain about the financial system, people tend to buy gold. That's the main thing that's driven it up this year. In the world I'm describing, I think things are a bit calmer next year. So I actually think gold's probably near a peak, but I don't think it come down very much. So I think it is definitely a diversification play and it's still a store of value.